Hello and welcome back. This is David from the Personal Finance Squad.
Knowing the rules of the policy. Okay, so insurance companies vary on what they can consider when quoting a price. So, of course, that gets into protection. Those are the coverages we've been talking about: comprehensive, collision, liability, gap insurance, things like that. Bottom line is what you're going to pay for it. So a general example is we have a driver, has a policy, doesn't have a ticket. So nice clean driving record, and 3 months later is issued a ticket. And that could change the vehicle rating, or it may change the class range as a different class of driver. Does the rate increase? Accident forgiveness, like Allstate, I might have had it at a point, or Liberty Mutual. So when you hit your first accident, they don't make your policy increase in the rate. In the event things happen, how do I know what to do? So this is a great question. How does the claims process work? It's pretty general. They probably give you a phone number, somewhere to call. Some have apps now to take pictures of the car so they can see it right there, and they can get an adjuster out to expedite your policy in a nice fashion. Policies are affected by a credit scoring system. Now I'm not sure how many use them, but it's for the major companies, most of them use a credit scoring system. It's some kind of computer program that determines based on your credit score, and it's a factor that can determine how it's going to affect your premium cost. They're not going to tell you how that system works. They're just going to tell you what your score was, because that person on the phone is not going to know that. But they'll give you a rating, and when you're getting quoted, you may get even a statement in the mail talking about credit policy or credit rating or running your credit, things like that. Like with my insurance company, there's a rating up to 24, and my number might be 18, for example. So why is it not 24? Things like that. It just gives you a general area of, hey, what's going on here? But it might make you think and go, listen, you know what? I have a really, really good credit rating. But that might not be the only factor. They might say, you know what? They can tell that your debt and liabilities, debt to income ratio is high, things like that. Again, you're not going to exactly know what it is. You just need to know the score of what it is. And if it throws a red flag, maybe you're better off going to another insurance company that might give you a better rate. But again, these are things you just need to think about when you're getting your policy. Recommended bump shops. So oftentimes insurance companies will say, hey, we have shops in the area that we do business with, and they guarantee the coverage on your car. Like they're going to fix your fender, for example. We guarantee that coverage to make sure it's 100% accurate. So that's what this mentioned, guaranteed. Now, like my case, I have a shop that I use, so I have that option to go do that, so I don't have to use what they have. I'm not worried about my car looking the way it should, but that doesn't mean that you don't have to go with who they have. In the event of an accident and the bump shop is doing work, who gets the check? So I've had it where checks get sent to me, and then I pay the company when they're done with the work, or they have the checks sent directly to the bump shop, which for convenience purposes, you'd rather just have that. For car rental insurance, what is your limit and how much companies can you use? So maybe Geico or something uses Enterprise, right? Maybe another one uses Budget. I don't know if this is necessarily like a big deal, but some people have their preference of what they want. So another thing is car rental applicable for when my car is in service? I'm going to say most of the time that's not the case. If you have a service problem with your car, that's not insurance coverage. But again, policies and coverages change all the time, so maybe there's something out there. But generally speaking, insurance covers a sort of a loss of some sort, but not a loss based on service of the car, the performance of the car, but rather something happening to the car that's unforeseen event by someone else, not by the quality of the vehicle. Car rental, again, is how many days car rental is covered on my policy. In my case, I have 30 days coverage, and they cover me for $30 a day. So car rental is an optional thing. It's of course another cost, but I like to have in case I've been in a car accident, because if you don't have that, that means you're going to have to go pay for that car rental yourself. So if you can afford it, it's a really nice feature to have. But these are things you need to ask questions about how it works and what you're covered for, and what is that as a cost to my policy, my premium. Roadside assistance. It's becoming more and more common with companies where They either throw in like a AAA membership as part of your policy, or they just have roadside assistance built in with a certain plan level, like Ameriprise. If you're through Costco and you have the executive membership, roadside assistance on the policy is thrown in as an automatic. It's not an additional cost. Or in some cases, you just may have to pay for roadside. So it's a good thing to ask. But roadside's becoming more and more one of those things that doesn't cost a lot. It might be thrown in as a bonus. A lot of companies are doing it in some shape or form. It'll become standard across the board, which is a benefit to you, the consumer. Here's some more. How does the process work if I'm being sued under my liability coverage? So again, those are questions like, hey, someone's suing me. Am I at fault? How much coverage do I have? What are they suing me for? Things like that. Process for things like this definitely does not happen overnight. So these are things you may want to understand in case it happens. If I have a claim that is not my fault, it is considered as a negative mark in my rating. So I can tell you this is a tricky one. I guess it depends on the insurance company. I can tell you that my son has had a few accidents in his past, and although a few of them weren't his fault, rose his insurance premium. I've had it myself where I've been in a few accidents. In fact, I don't even have a mark on my record, but my insurance went up just a tick or two when they did the policy quote because they said I was involved in a couple accidents. Payment options on the policy. For example, here's another one. Ameriprise, they just changed to yearly, but I think they did that for the state that I live in. In other states, they might not ask for a yearly up front. Oftentimes, if you pay yearly with companies, they'll reduce the premium, and we talked about having payments in lump sums in Chapter 3. They might do it for 6 months as well. I would say most companies offer a monthly option because, figuratively speaking, policies, especially the bigger the family size, the number of cars, the policies get very expensive, and people can't afford but to pay on a monthly basis. Okay. So we want to get a little bit into how a policy is priced. And there are several factors which you can tell by just going through these questions and some of the coverages out there that it creates the determination based on options where you live. But these are some pieces in here you can really get into and understand, at least figuratively speaking and realistically speaking, about how to help your car out a little bit. Again, understanding something makes things a lot more palatable even if you don't like the answer. So things like this in here make sense to that notion. So age or years of driving experience. So younger drivers, statistically, are going to pay more than older ones. And the reason being is they get in more accidents, and fractions in accidents are higher. I remember when I was driving as a kid, when I turned 19, 21, I think it was 23 and 25, and I don't know what it is today. Whatever the math is today on these, at these points, I noticed a big drop in my coverage. I had good records, but I noticed when I hit these numbers, just by general policy cost, my premium went down respectively because of the statistics that the older I got with these in these ages, that the accidents were statistically down from being a 16-year-old. The make of the car, that makes a lot of sense, right? So if you're driving a Rolls Royce as opposed to a, let's just say, a Chevy Cruze, I think this is how you spell it, it's obvious that it's going to cost a lot more to insure this car than it is this car. It's just simply this car is worth more value than the Chevy Cruze is, respectively speaking. So if this car, let's say, is worth $100K, and this car is worth 20, and you have the same damage on the front bumper, you know it's going to cost more for this car. So that's something you have to think about, especially if you buy a car, a new car. When you buy a used car, the value continues to go down on it, right? So Rolls Royce that's 50 years old, maybe a lot less in value, and you can see that comparatively speaking, the rates would be lower. It's pretty obvious information. But here's a fun little set of cars here for a statistic. The dates are from 2008 and 9 at the time of this writing or this video, but you can see that there's always a list of the most theft rates. You can see that a lot of four-wheel drive vehicles are on this list. Silverado, Sierra. This may be four-wheel drive. This one I think is So there's certainly a repetitive pattern. The Escalade's a big car that probably has four-wheel option. So a lot of these cars have four-wheel drive. I'm not sure what the correlation is. You can see that the claim thefts are just pretty high, and that's just the way it is. This is just something a little fun to play with, but what the understanding is these are things you need to think about when I own a certain vehicle. So think about the value, think about what you have, and if you can certainly ask, what is does my car tend to get broken into more, or go do some of this research yourself. Go on the internet and type this in. And if your car is on this list, this is something you may want to consider before you buy it or lease it. Income. So if insurance pays for lost wages due to an automobile accident, the premium may be higher or lower depending on the income. Then this is another factor-based thing that they put in. Here's the main one right here. And again, this is obvious, but driving record and previous insurance history. Some states accept applicants at regular rates if they meet specific criteria. So if you met certain criteria, you're in this little rate class, and they have to do it. Again, do you really know that they are? I don't know, but you can tell by when you compare quotes from other places. But you can see traffic and drunken driving convictions and at-fault accidents can change this landscape on this. What we're really saying here is the crappier your record is, the higher you're going to pay. And you can get lists of what your infractions are, what they're nailing you for, even the ones we talked about when it's not your fault. Without an obvious statement here, but the better the driving record, the better the chance you're going to pay less. It's just simple math. You're not getting in accidents. You have a great driving record history. So be good with your car and obey the rules, and it's going to benefit your wallet. Vehicle usage. A common question is, how many miles do I drive to work? So your rate can depend on, say, if I say I drive 5 and I multiply that out, then more of the question may be more of they want to know how many miles do I drive each way. And then they'll ask, how many miles do I drive in my car per year? The thing, that factor they put in and say, hey, the average car is 12,000 miles a year for the average driver. These are the things that they want to do, and what they want to try to figure out here is the wear and tear in the vehicle. It's less important than knowing the fact that you're in your car more increases the risk that you're going to get in an accident, and that's just straight math. Lifestyle conditions. Rates may be affected whether someone's married, single, have children, own a home, number of vehicles owned. So you can get discounts because you have multiple vehicles with the policy, or a multi-car discount is what they call it. That's a very common one that you can bundle, which I'm sure we're going to have some dialogue down below saying the same thing again, you pair that with a homeowner's policy. Usually it's a good 10% or something like that. But these have discounts for if you are a homeowner. They want to put the factors in their computers based on everything you put in there to determine miles, history, where you live. They put all these factors in, they keep coming up with these rates. So every time you put in another factor, it keeps computing. When they're done, they're going to end up saying, okay, you know what? This is the rate we're going to give. So you might not be able to hit every one of these to get the best rate. The idea, again, is to get the discounts, get the best way you can, and have a good record, and determine which kind of car you want to drive. Extras. So we talked about roadside assistance and car rental. If you add them on your policy, it's going to cost more. They're not generally a lot of money, but those are more for your option and protection. So consider that. Credit scoring. This is a big one. We just talked about this a little while ago. You might get a credit factor, some kind of score. Again, you're not going to know what that is. What you will hear in the industry is that there's a correlation between one's credit score and the likelihood that the policyholder will file a claim. Credit report high probably is a higher premium. And again, they do not typically reveal how the premium is affected. It's just a rating scale. So they do these correlation models and say it's kind of like if someone works mortgages for a living. If they have a history of bankruptcy, there's a likelihood more that they're not going to let that person work there because they went bankrupt on their house that they already owned. So they think of things like that they just put the statistics together, and it's just mathematically says if you have a lower credit score, you tend to get into more accidents. And over the last 10 years or so. I'm not sure really the timing, but this is something in the past when I was a young adult or my 20s or so. I don't recall credit scoring being a factor. This is more of a newer thing in how they determine a policy price, or one factor of it. You've heard me say this several times. Place of residence, where you live, has a big effect. I remember that I lived at one time in a zip code that was bordering a big city that didn't have the best crime reputation. I wasn't, and bordering meaning I was still a good half-mile away from it, but part of my zip code had the same number string. So for example, 1, 2, 3, 6, 8. All the zip codes in that major city started with a 3. So since it was bordering and it looked like a zip code that was more in there, and this is what they told me, my rate was a lot higher. Then I moved 40 miles away, and my insurance went down $1,000 a year just for the fact of where I was residing. So that can make a huge difference. So if you border a city or an area that does a high crime rate, theft rate, accidents, whatever it may be, there's a good chance you're going to pay more for it, or if obviously you live in one of those. So knowing a company's history is important, especially maybe you don't like the way that they've handled what they said they have. Maybe they didn't cover the things they said they would. Maybe you don't like the way that they handled their business, like a process. Other things a little deeper than that is operational financial information. Like you can go and do some research on companies out there and say, you know, who's are rated the best companies to work with. All right, so we're going to cut it short here. We're going to get into our last section. What you can see here is the premium and policy declaration. We're going to get into a little bit more of a pricing and putting into the budget supplemental exchange, and we'll go from there. So thanks for joining, and we will see you in the next video.